Welcome in this video. Xcn coin broke the trend. Is the flight coming? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. Looking at the chart from a general perspective, one of the most notable structures is a falling trend line that has been suppressing price movements for a long time. This trend has caused price movements to fluctuate downwards within a certain channel from the past to the present and has had a serious impact on investor psychology. Although this falling structure has caused short-term selling pressures, we are now witnessing the end of this trend and a positive breakout. This breakout is a highly meaningful and promising development in terms of technical analysis. While the downtrend often creates an environment of indecision and uncertainty among investors, the fact that the price has clearly broken the trend to the upside suggests that this oppressive process is over and market perception is beginning to change. Trend breaks are often harbingers of major reversals in technical analysis and are therefore of high importance. The fact that this breakout has occurred suggests that the price is about to write a new story and open the door to a bullish scenario. What makes this technical development even more valuable is that after this breakout, the price entered the retest process, one of the classical technical analysis theories. Retest is a very positive development for traders because a retest of the broken trend or structure can be a strong signal that this level will now work as support. The price's attempt to hold on to the falling trend line that it has broken back to is also a test of the strength of the structure and investor confidence. If the price stabilizes in this area and regains upward momentum, the uptrend that follows this move tends to be much more decisive and powerful. In technical analysis, retests following trend breakouts are often supported by high-volume buying. This indicates that the price has been confirmed by traders and market participants are more decisive about the direction. In particular, the increase in volume confirms that this breakout is not a fake, but rather the beginning of a strong and lasting turnaround. This is exactly the structure observed on the current chart. A downtrend break and subsequent retest heralds a brand new era in price action. At this point, one of the most important considerations for traders is whether the broken trend has now become strong support. The retest is therefore important, because at this stage, if the price stabilizes at this new support zone and upward movements begin, this boosts trader confidence. This confidence also mobilizes traders who were hesitant to open positions. Thus, the volume increases, the number of transactions multiplies, and the price can continue its uptrend more easily. Another important factor is the breaking of psychological resistances. Downtrends are not just technical patterns, they also represent investor psychology. The fact that the price falls at every contact along the trend line leads to the perception of sell here among market participants over time. However, this perception changes dramatically when the trend breaks. Traders no longer see these levels as resistance, but as new support. This change in perception also positively affects the direction of price movements. In the current situation, the price has overcome an important technical hurdle by breaking through the falling trend line to the upside, which has been a source of pressure in the past. While this development is a positive signal in itself, the retest that followed is a confirmation of this signal. This technical combination suggests that the price may now be preparing for a new bullish wave, and that higher highs than previous levels may occur. But we can't decide the analysis with trends alone. Let's look at other metrics. Stay tuned. The current analysis according to the Elliott wave theory shows that the market movements are currently in a very remarkable and promising phase. In particular, the current wave count shows that the price has most likely successfully completed the second wave of correction and is now in a strong preparation for the start of the third wave. This is a critical point from a technical analysis point of view, as the third wave in Elliott theory is usually the phase of the strongest and steepest rise. In this context, the current positioning presents an exciting technical picture for investors and provides grounds for positive expectations. The end of the second wave and the strengthening potential for the price to enter an upward trend suggest that the market structure is changing. In particular, the start of the third wave could leave past price behavior behind and open the door to a new and stronger trend. Such situations are called momentum reversals in the world of technical analysis and generate extremely important signals for traders. It is also noteworthy that the current position coincides with a period of increased investor interest. According to the predictive power offered by the Elliott wave theory, the lowest target that the third wave should reach is the 618 Fibonacci extension level. This is considered to be a zone where the nature of the wave structure should bring a much larger and more voluminous rise than the first wave. At the same time, if the market momentum remains strong, The target of this wave may not only be limited to 1/618, but there is a high probability that it will continue up to the 2272 Fibonacci level in case of an extension wave. Such extension waves not only offer traders significant earning opportunities, but also significantly change the overall mood of the market. Therefore, the positioning before the third wave is of great importance for technical analysis. The current movements can be considered as a kind of accumulation and preparation period. At this stage, the price may be consolidating in a horizontal and controlled structure that will be of interest to investors. This consolidation process can be interpreted as the last correction phase of the third wave before the upside breakout. Such structures are usually the precursor to a strong breakout, and the upward movements that follow are usually voluminous and decisive. In addition to all of this, the Elliott wave structure is quite symmetrical with the current price action. The first wave presented a short and pronounced upward movement, followed by a second wave that pulled the price back a bit in a classic correction. However, it should be noted that the second wave was completed in a way that was quite consistent with the Fibonacci retracement levels. This is a reassuring development in terms of technical analysis, because in an ideal Elliott pattern, the second wave is usually completed between the 0,618 levels, and the current movement has turned its direction upwards by finding support at exactly these levels. With this technical compatibility, it is clear that the third wave has high potential both structurally and psychologically. Potential price movements above the Fibonacci 1,618 level could further increase investors' appetite. If market dynamics remain positive, it is possible that not only the 1,618 level could be reached, but also the 2,272 level and perhaps even further targets. This could form the basis for a medium to long-term bullish scenario. The current price behavior suggests that this third wave is only at the beginning and momentum is building gradually. This transitional period can be very profitable for patient investors. Because although the initial stages of the third wave often start with small rises, over time the momentum builds and the price makes sudden jumps to reach remarkable highs. When we look at the RSI indicator, we can clearly observe that a very remarkable and positive structure has started to form. In particular, the rising trend line on the RSI clearly demonstrates the recent momentum and technical strength of the market. Such rising trends can be a harbinger that price action is on a healthy footing and momentum is beginning to steadily increase. Currently, this rising trendline drawn on the RSI acts as a dynamic support and tends to generate upside reactions every time the RSI approaches this trend line. This may give traders the opportunity to better assess potential bottoming points. From a technical analysis perspective, the direction and movement of the RSI indicator often provides leading signals about the future direction of prices. An uptrend on the RSI indicates that market players are feeling less selling pressure and the appetite for buying is gradually increasing. Especially during periods of such patterns, the RSI reacts at a higher point at each low than at the previous one, which both reduces the likelihood of a positive mismatch and increases the likelihood of prices climbing to higher levels. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.